hybrid mutual funds, there was a huge increase, especially over 37% of the population has actually invested in this. So you know what is a mutual fund and you know what is an equity mutual fund. So equity funds are fundamentally where there'll be a fund manager, very simple, a fund manager and people. These people come to him. What he does is they take your money and these people invest in different companies. Usually what a person will do, he will put it in FD or RD, or maybe he'll do a little bit of trade, and usually the returns are not so great. So what these people do is, this fund manager will put it in different companies, and since they know, these fund managers know which kind of companies to invest so that the returns are higher, and it is public money, therefore they'll be very careful about taking a decision. So such a kind of fund is called equity fund. Now similarly, there are other debt instruments like I should say your corporate bonds, your government bonds, gold bonds, all these kinds of bonds are there. These are all debt instruments. So hybrid mutual funds are those funds where the equity funds as well as your basic debt instruments, both of them are mixed. That is very important. Your equity funds plus and your basic debt instruments, both of them are combined. Since it is combined, it is called a hybrid model. The advantage of this is it is a low risk opportunity. You can invest more and the returns are fantastic, and it is safe. Instead of investing in one kind of format, you are investing in multiple formats so that the returns are higher and the risk is less. End of the day, that is what the public want. Because it is like that, close to 37% of the population in India has invested, and that comes to somewhere around 25,000 crores of rupees have been invested into this by our public. Therefore, it is very important to learn a little bit about that. So what is this? Hybrid mutual fund schemes, 20,000 so much crores, making 37% surge from the previous month. An alternative investment option, and the highlight is the change in taxation laws for debt funds. Recently there was a change in the debt laws, so the rates have been reduced, and because of which a lot of people started investing a lot of money into these debt instruments as well as equity funds. So keep that in head. Now, what are these hybrid funds? Hybrid funds are a combination of equity as well as debt features into a single fund. Now, hybrid funds are fundamentally mutual funds. That's the best point. This is very useful for your prelims. So they might give you a statement, hybrid funds are mutual funds. What are hybrid funds? They might give you 1 or 2, 3 points and then ask you which of them is true with respect to hybrid funds. So please remember, it is a mutual fund. It's a combination of equity and debt security and sometimes other asset categories into. Now, an hybrid fund tries, what does it do? It gives the investor best of both the worlds. What is it? It is not risky and it is not too low on returns. For example, if you put an FD, for the year you get somewhere around what? 6%, 5%, 5.5 depending upon the bank. If you're going to government things, it is 4.5, 3% and 7%. But these funds give somewhere between 12 to 14%. That's the best part. The risk is low, reward is fantastic. It is not too low, it is not too high, but you get guaranteed returns. Therefore, since majority of our Indians are middle class, we want less risk and better return. That is the whole criteria. So keeping the Indian public in mind, these funds are making a beautiful way into the economic market, right? So what are the different types? Just remember them, not much. Aggressive hybrid funds, balanced hybrid, these are all for exclusively pure economics, guys. Balanced hybrid, conservative hybrid, equity saving funds, arbitrage funds, multi-asset allocations, and balanced advantage funds, which is called dynamic. So these are the different types of hybrid funds which are available. Know this, I think just remember this. Aggressive hybrid funds, where the aggression is more. Balanced hybrid funds, both equal, where the equity funds and the debt instruments both are balanced. And equity saving funds, whatever you are investing through the companies, the returns are all saved fundamentally. That is the reason it is called equity saving funds. Arbitrage funds are fundamentally where you put a little bit of, what do you say, a little bit of collateral and then start doing it. And then multi-asset allocation, what you do is you take the returns, put it in different asset growths as well as debt instruments and make it grow. That's the whole highlight of it. And balanced advantage of both the funds will be there with respect to these funds. So I think why they are very attractive is because they appeal more to the investors and moderate because low risk profile. And these funds are very good investments options and reduce the volatility. The major problem with equity funds is volatility. If you, for example, let's say you're trading in stock market, let's say you're doing something like bank nifty, you put an option, it goes here, we don't know, it's very volatile. So reducing the volatility is a very good thing. Therefore keeping that in head is very important. And majorly fixed income market. So that is a highlight of hybrid funds. So what are the highlights? Low risk, more investment, less volatility, and fixed income projects.